and because some of us couldn't join, and yeah, they will need the recording. Does it show that it's a recording on your side?
Yes, yeah, I can see.
Yes.
Okay, thank you. So yeah, you're going to learn how I benefit from this war. It's very interesting. You're going to understand why we even have this war. Honestly, I feel like from 6:30 to 8:30, I feel like it's kind of not enough time. If you guys would allow me to extend it a little bit, I wouldn't mind doing that so that we cover more things. So I don't know, it's up to you guys. Some of you, I know you already want to rest. It's a weekday and all of that. So, but yeah, nonetheless, I believe that everyone received the workbook that I sent, and also please go through it, utilize it, make sure that you read it, you use it, because you have to use it. I would prefer that you print it out. You can even share it with your family so that they can do the same thing. um you have to trace money, you have to be able to track your money and all of that. So that's how you structure your finances. So yeah, um let me share my screen. I want to share my screen now. I'll turn off the camera.
Lona kuwa ukawa Lona hawani.
Are you able to see my screen on your side? Does it appear? Do you see it?
No.
No.
Not yet.
Oh, okay. Let me see. I don't understand. What about now?
Yeah.
Can you see it?
Yeah, I can see it now.
Yes, we do.
All right. Perfect. So usually,
I can see. I can see. I can see.
all
Yes,
right.
I can.
Thank you. Usually when I do this master classes, we start by teaching the financial system. For those of you who are repeating, you definitely know the financial system. So, because that's the foundation of us even starting to invest. Why are we even investing in the first place? There has to be a force that is forcing us to invest. If we just do it because we just want to invest, um, we may not have enough motivation to keep on investing. So once you understand the system is basically how the government works. how the government works with the central bank, which is the Reserve Bank. In South Africa, they are called South African Reserve Bank. And then also the commercial banks, which is FNB, Standard Banks, and all of these things. So you are about to understand how how you should actually navigate the financial system, how you should view the financial system when you see problems such as war, COVID, or malaria, or load shedding, or photos. That should be seen as an opportunity to you. It shouldn't be just a thing that actually scares you off. Whenever there's something that is trending on the news, such as war. You see, now we read about war everywhere. Whenever there's something trending, you have to understand that um there's something that is happening behind the doors, and that something is actually money moving. So money is moving, but they're using something as a distraction to interrupt us so that we don't see what is happening. But today you are about to understand that, and I would recommend everyone to read a book called 1985. Is it 84, 85 by George Orwell? So you will understand how the government lied to us and all of that. Yeah, it may not be, you will enjoy the information, but you may not take it too well. So yeah, but anyway, let's start. So, well, how to start investing in shares, right? So we're gonna come to this slide once you understand the financial system. This is the last part. Actually, investing is just the last part. It's the last piece of the puzzle. So now let's go to our thing, right? Our whiteboard. So the financial system consists of three key players, right? Key player number one is the government, right? We have the government. Key player number two is banks, right? So banks is local banks, commercial banks, and local banks and commercial banks is actually, I mean, the same thing, like our FNB, Standard Bank, ABSA, those guys. And then key player number three, which is the main key player here, is the Reserve Bank. So in South Africa, we have South African Reserve Bank. Okay, so there's a huge difference between South African Reserve Bank and South African Revenue Services. So Reserve Bank is not SARS. So SARS is the one that is responsible for collecting taxes. That's the one that if you don't pay taxes, you will deal with them very well. So, but you are about to understand that system very well. I'm about to unpack it for you. So I need 100% of your attention, guys, at least just for this. So, and then down here, we have the slaves. La, this is us, the slaves or people in the economy. Let's just say economy, because I wanted to say businesses, but we'll just say the economy. I think it's better this way. So these are the key players. These three. One, two, three. These are the key players. However, they can't function without the slaves. So now here's the thing. Here's how the system operates. Number one, it starts with the government. What does the government do? The government identifies a problem that requires money, a problem that if we look at the Reserve Bank, we will say, guys, you know what? I don't trust Teams. Okay, but it's recording fine. Okay, so I can say the government actually wants a problem, right? So, guys, please feel free to ask me a question if you feel that I'm losing you. I don't want to lose you anywhere. Please feel free to unmute your mic and ask me a question, and then I will answer you, because sometimes you will think you raised a hand and I can't see your hand, because for me to see the hand, I will have to go to here. I will have to come back here and go to the chat, right? So yeah, if you have any question, please feel free to just shoot. Okay, so so far, do you guys hear me? Are you guys still with me?
Yes.
Yes.
Yeah, we do. Yes.
Okay.
Hear you
Yes.
loud and
Yes. We're with you.
Thank
yes, we
you,
can.
thank you, thank you very much, guys. So the government, the role of the government in this picture is to identify a problem. What is a problem? A problem is COVID-19, a problem is photos, a problem is war, a problem is load shedding, a problem is traffic lights not working, a problem is malaria, is cholera, or political problem, whatever, or what is this problem that is common nowadays? Um, Climate change. Yeah, they say here they want to fix the climate change. Any problem that us as country's citizens, we expect the government to fix. When we cry about not having water, we expect the government to fix it. That's a problem that the government needs to fix. However, the government needs money. So they need money to fix the problem. They can't fix the problem without money. They can't fix the potholes without money. They can't replace the traffic lights without money. They can't fix load shedding without money. They can't go to war without money. So the government now has to find that money so that they can fix the problem. So the question is, where will they get the money from? Because the government doesn't have money. It's just like you and me. They don't have money. If they want money, they do what? They go and borrow it from somewhere. But the question is, where do they borrow it from? Well, they borrow it from multiple places. Number one is the IMF. IMF is International Monetary Fund, right? You study the IMF if you don't understand it. Let me write it down actually. I am okay, or let me write it here. IMF. You will understand why I'm writing it here. That's number one, right? Number two is the Reserve Bank. They don't go in sequence, guys. It's not number one, number two. I'm just the example. This is my example number two. So number two is the Reserve Bank, South African Reserve Bank, right? Number three can be banks themselves, right? Number four, it can be private companies or um, foreign countries, right? Okay, let me give example with this one. Um, if South Africa need money now, or we've heard before our government saying that they gave money to China, or they loaned money from China, or this and that. So that's the government borrowing money. But how do they do that? Well, they facilitate that procedure through bonds. They issue out bonds. So this is why there's a saying that goes, if you don't understand bonds, you don't understand money. It's not a myth, it's real. But today, if you didn't understand them, you are about to understand them. So, okay, there's someone here. Let me approve. Okay. Yeah, so bonds, right? The government, remember, they need money to solve the problem. The problem is what? The problem we said is COVID or war or load shedding or water shedding. So the government do what? will go to the Reserve Bank and borrow money. But how do they do that? They issue out bonds. Bonds. So the Reserve Bank buy government bonds, right? Guys, if you don't understand me, please ask a question. So the government issues out bonds and give them to who? To the Reserve Bank, right? The Reserve Bank is always ready to give the government money whenever they need it, and the Reserve Bank print money. You are about to understand that. So the Reserve Bank will take money, will print money, and give it to the government. But here's the question now. Money. Money. So money. So the question is, where did the Reserve Bank get money from to give the government? Where did they get that money from? Does anybody know? And by the way, who do they call themselves? South African Reserve Bank. They call themselves Reserve. And okay, so every country have their own reserve bank. Countries that don't have reserve banks, they are the countries that we see the United States of America going into war with them, such as Iran. They don't have the system. This is why they are into this war. You are about to find out why. And this will answer your question as to why do we have a war in Iran now, you see. So you no longer follow the noise. And the reason why I said you must read that book 1985 by George Orwell is because you will understand why and how do they lie about this war. So we'll see the headlines and everything that we know about this war, by the way, is everything that we hear about, that we know about this war, is from American media. So we've never really heard anything from Iran itself. So you can imagine what is happening there, you see. But um it's very important, or the point is that it's very important that we don't pay attention to the propaganda. So yeah, now we follow money. So the question is, where did the Reserve Bank get money from? Does anybody know? Because this is how this thing happened. Let's do it in accounting now, accounting format. It's like this. Please answer me, guys. Where does the Reserve Bank get money from? Here you have the government.
Can I answer you?
Yes, just answer, my brother. Anyone, just answer, and then
Yeah,
yeah, no right answer.
yeah.
Just
They print the money. They just print it from their computers.
yes. So exactly, you are right. So they print the money straight from their computer. But the question is how? Okay, let's say this was during COVID, they needed 500 billion, right? Let's write it here. Let's say 500 billion, right? So they go to the Reserve Bank and the Reserve Bank will buy those government bonds. What is those government bonds, by the way? Is IOU. IOU. I owe you. The government say, I owe you, the Reserve Bank. Give me money. Okay, I will pay it back. It is as simple as that. So let's say it's that 500 billion. That 500 billion left the Reserve Bank's account, right? And it went to the government's account. Simple mathematics or accounting, right? So, okay. So, no, this is opposite. It's supposed to go like this. Yeah, 500 billion, right? So, okay, let me do this as well. So, government took bonds to these guys. Bonds. money. Shouldn't be too difficult, right? So now the government, now that they got that money, it was during COVID, they got the 500 billion. They need to distribute that 500 billion to who? To us, the slaves. And until we need the 350s, that's that money that they're giving us now. We need 350s. Businesses need bailout. They need to actually, um, what is this thing called? They have a term for it. They need to bail us out, right? They need to save us. They need to save businesses. They need to offer loans to businesses and all of that. They need to distribute money into the economy because they printed money. The Reserve Bank, the moment the government went to the Reserve Bank and said, "Give me money," the Reserve Bank printed money. The Reserve Bank, that money doesn't come from anywhere. They just call themselves Reserve Bank just to fool us into thinking that they are reserves sitting somewhere, or it's a bank with money sitting somewhere. So there's no money, there are no reserves. They're just the Reserve Bank by name. And South Africa, we have our own Reserve Bank. USA, they have their own Reserve Bank. Other countries also, they have their own Reserve Bank. So South Africa, in USA, it's called the Federal Reserve Bank, right? So that's the same thing. One would say it's the central bank, it's the same thing, right? So um the government we can't go to the treasury to get this 350. The government need to facilitate that procedure through banks. So the government will give that money to the banks. They need to, that money need to flow through banks, and banks need to give it to us in the economy. So for the banks to give us this money, they need to make it cheap. How do they make money cheap? How do they go about that? Right? They make money cheap by cutting interest rates. Now that's the secret there. They cut interest rates. What type of interest rates do they cut? They cut repo rates. This is prime. Prime is the interest rate that the bank charges who? Charges us, normal individuals and businesses, right? And then there's there is repo rate, which is interest rate that the Reserve Bank charge who? They charge the commercial banks. They charge our FMB. So the same way that we pay interest rate to the bank is also paying interest rate to the Reserve Bank, right? So um the the once they have to distribute this money now, they are going to cut interest rates. The Reserve Bank is going to cut interest rates first, and then the commercial bank is going to cut prime rate, so that money becomes cheap to us, so that people can go and borrow money. Why? So that economy can be stimulated, so that that problem can be solved, right? They give us the 350s and all of that. So this procedure is called quantitative easing, when they cut interest rates to increase money supply, right? So the question is, what impact does this have on the economy and us, the slaves? Why did I say we are the slaves? Huh. So here's the thing now. You see this 500 billion, it needs to be paid back. It's a loan.
Sorry, sir.
Yes.
Yeah, I'm confused on this. Like how the government transferring money to banks.
Okay, that's the question. So, okay. So they don't necessarily go to the bank and say, "Hey, FNB, take this 100 billion. You Nedbank take another 100. You ABSA." They don't do that. They do quantitative easing. That's the procedure that I explained. I said it's quantitative easing. They um They cut interest rates, they start by cutting repo rates, and then banks will cut prime rates. That way, money becomes cheap, it can be distributed. Money that is distributed is not cash, it's digital, it's all digital. So the government is simply giving banks access to print 500 billion. And this is why the banks are in this game. They're
Oh,
saying, okay, you, the government, we want to, you, the bank, we want to make sure that we distribute 500 billion into the economy through you, right? So print that amount and borrow as many people, or just you don't necessarily have to print 500 billion exactly. You can print as much as you can, but as once we have reached the 500 million limit, when 500 million, billion is distributed into the economy, we are then going to increase interest rates. That way, we reduce the money supply. When we cut interest rates, people will come to borrow money because it's cheap, right? The banks have nothing to lose. Why? Because it's the Reserve Bank that cut the repo rate. And the Reserve Bank prints money out of thin air. I hope it makes sense. Does it make sense? Or you need me to clarify?
okay, okay. Let me ask this question first. Who actually
Yes.
print? Who actually print the real money, like the paper?
It's Mint. Mint prints cash. And then
Okay.
all the money, look, cash, the cash that we have doesn't even account for more than 30% of the total money that is distributed, that is printed, sorry. So when I say print, I don't necessarily mean to print paper, normal paper. They just print
Yeah.
on a computer. They just type on a computer, right? So that money, the total money out of 100 billion that that they printed in on a computer, at
Yes.
least less than at least in the economy, there's only less than 30 billion that is circulating. I'm not sure of that percentage exactly, but it's way less. So it's all digital. All this money moves digital. They can see that we injected 500 into the economy. So let's increase interest rates. That way we cut the money supply. People no longer borrow money. So inflation will then, I'm coming to inflation. So actually, when they print money, it causes inflation. So the consequences of them printing money, it causes inflation, number one. Inflation. Number two, um, number two, it causes taxes. So here's the thing. Number three, wealth gap. Is it gap or gap? Okay, so here's the thing, right? When these guys inflate money, when these guys distribute so much money into the economy, it causes inflation. Because imagine now, you have all the money that you want, or we are in a family. Let's say maybe it's a family of five. All of us were millionaires.
Yes.
So if we are millionaires, no one is going to control the other person. You can't control me, I can't control you. You don't give me your money, I don't. No one gets money from the other. So even when we spend, when we buy groceries at home, we are not going to buy grapes for 25 bucks. We're going to go for those ones that cost about 50 bucks, right? Because we can afford it. And it's still the same grape. It's a grape. It's just that I'm willing to buy it for higher price because now I have money. So that's what happens when they print more money, when they distribute money into the economy. Everyone now have money. Suddenly everyone have 350, and suddenly anyone can spend money. So, and everyone realize, business owners, they realize that, oh, money is distributed, let's increase the prices, we want money. So that is inflation. It causes
Oh,
inflation. So it's bad because the prices increase. Prices always increase, and salary doesn't keep up with the rate at which the prices are increasing. You see, so they say our inflation rate is how much? 6%, 4%, 5, 6% on average, right? 6% on average. I say it's way more than this. Okay, this can be made simple. Yeah. Inflation rate South Africa. Oh, I exaggerated it. Okay, so it's between 3 and 6%. You can see, right?
Yes.
So
Mm.
I don't think you're ready for this. So when they say inflation is let's just say 6%, or because they said 3 to 6%, so let's say our average is 5%. It means prices increase by 5% every year. That's what they mean. But is that true? Is that really what is happening? Because let's check. I like to give this example with bread, because bread is just a simple thing that everyone can access. Bread in 2016. Okay. Because you guys will say, hey, Fortune, you are exaggerating, you're coming up with the numbers. Um 2016, South Africa. Let's see, 2015. Okay, fine. It was 11 rands. That was white bread. Can we all see that?
Yes.
Right? So, because between 10 and 11, let's just say 11 rand, right? So, okay, fine. 2015, the bread was 11 rand. Today, in 2026, okay, let's use last year, 2025. Bread is how much? Me, I buy it for an average of 20 bucks, 22 bucks. How much do we use?
Let us use 20.
Okay, 20 bucks now. So we need to see how we need to see the percentage rate at which the price of bread increased by for the past 10 years, 2015 to 2025, right?
Yeah.
So let me do this. Okay, so we'll actually say 20 minus 11 divided by 11. This is the formula, right? I hope it's correct. Yeah, so this is going to be multiplied by 100. So it's 20 minus 11 divided by 11 multiplied by 100. Yeah, that's 81%. Fine. How much? 81%. So it means that for the past 10 years, we'll just take it that price of bread increased by, based on this calculation, it increased by 81%. from 11 rand to 22, I mean to 20 bucks. So the question is, each year, how much has the price of bread been increasing by? That will give us the inflation rate. So we're just going to say 81, divide by 10 years, which is equals to 8,1. So their inflation, their inflation thing, the statistics that they give us, which is an average of 5%, is actually not what the real calculations are telling us based on the real numbers. Does it make sense? Why did it rub
Oh.
off now? How much is it? 8,1, right?
Yeah.
8,1%. So this means whenever you invest your money or you save, whatever that you're going to, whatever that you're going to make, whatever the percentage rate that you are going to get from investing or saving, it must be more than 8.1%. Otherwise, you're not making money because you're losing to inflation. Anything less than 8.1%, you're losing it to inflation. So do you see that the banks, what the banks are giving you, the interest rate that they are giving you is actually less than the inflation rate? When you save your money in a bank, you are losing it. Can we all agree on that? Because they don't give you more than 8.1% per year. It doesn't keep up with the increase of the price of bread.
You are quite right on
Eh,
that.
Yes, and on top of that, they're going to charge us the bank charges.
Mm.
Of
They
course.
give us roughly how much? They give us roughly, on average, 6%. If you get 6%, you are lucky still. So minus 1% are the bank charges. You're left with 5%. This means every year, if you saved your money with a bank and you get 8.1%, I mean, you get 6% on average. We minus bank charges 1%, you get 5%. So 5% minus 8.1. We want to see how much you're losing now. 5 minus 8,1. Is it 3,1?
It's 8,1.
Hmm?
It's 8,1, right? You said the
Yeah.
answer. You want?
Yeah,
Yeah, it's 3.
just to be
Okay.
3,1. So you're losing 3,1% for saving your money with a bank every year. You think you're investing? Oh,
So
I'm investing.
no,
I'm
we're
saving.
working at a loss.
Eh? Eh?
And mind you, that money
We're
you have
working at a
invested,
loss.
Yeah.
I was just
Is it?
saying, and mind you, that money you have invested, or actually we have
Is it?
invested, they are taking it and trading with it and
Yes.
making more millions with it.
Definitely, because let's
What?
just assume that you took this money. Let's say you had 1,000 rand and you put it on MTN, right?
Yeah.
Just for a mere 2 years. Let's take it for the past 2 years. And by the way, guys, as an investor, you must have an app called Trading View. The first one. Can you see it?
Yeah. What is it for?
You are about
What
to
is it
find
for?
out. That's where we read information about a company. We read the share price as an investor and all of that, right? Let me show you though. So this is MTN, right? This chart, guys, this chart is commonly known as Forex chart, blah, blah, blah. Guys, Forex,
Indeed it is.
yeah,
Yeah.
Forex is short term, okay? When you see
Yeah.
this chart, other people see trend. Other people, they see this. They're
Yeah.
waiting for the third touch here. They're waiting for the market to do this. They call it Fed touch, and then they're gonna wait for something like this, and then boom, that's how it's
Continuation.
commonly known. What do
Yeah,
they
wait,
call it? Raising flag.
back, pull back. After pull back, you enter your
Yeah,
entry. Yes.
yes. So I see a performance of a company. I don't see the trend line. Okay, I'm just being real now. So here's the thing. Forex is for short term. Forex, if you want to be a forex trader, fine, that's great. It's for short term benefits, right? You win fast, you lose fast. However, with investing is long term. The moment you get yourself into investing, just understand that it's long term. You're not in it for short term. It takes years. If you want short term gains, forex is for you. You want long term wealth, investing is for you. Or trading, let me not say forex, because you can still buy shares short term. It's not forex, it's not foreign exchange, right? It's buying shares, stocks. So short term is trading, investing is long term.
Yeah.
Simple as that.
Yes.
So when you see this, it shouldn't be a trend line. This should be a performance of a company. Since when? Let's take it from here. Since when? Where's the date? Nah, a date.
For
1st
2020.
June 2021.
Yes, we'll just say 2020, 2021. Okay. So this is the performance from 2021, right? Going where? Going to today. This is today, right?
Yeah.
Mm.
Okay, let me fix the price first, because it's showing the share prices are. Hold on, hold on, hold on, hold on. Where did we put our thing? Oh, suddenly we are in Forex Masterclass. Okay, yeah. So this, okay, today's date is here. This is today's date, right? How much is the share price of MTN today? It's 208.
208.
This,
208.
yes, yes, this is why we use this platform. This platform helps us with what? Seeing the share price. Oh, I want to invest, but I don't know the share price of a company. I don't know how to see. I don't know what is a share. Now, this is a share. This is MTN. How do I know that it's MTN? It's written down here. Oh my
entry.
God. What did I do? Hold on. I made a mistake. I'll show you what I mean. I wanted to pick this one. Down here, it's written MTN. Even here, it's written MTN, right?
Ah,
Mm.
You can analyze countries, currencies, and companies the same way. When others see Forex charts, see a performance of a company. If it's a currency pair, XAU, USD, gold, see a performance of gold. Okay, so now on the right, this is the share price. This is where we see the share price of a company. If we say share price of MTN is 208 rand, it means one share of MTN you can buy it for 208 rand. That's what it
yes.
Mm.
means, right?
Yes.
How much
Yeah.
was the share price on this date? The date that we picked, this one. In 2024 May, how much was the share price of MTN?
46 rand.
6.
Rand
Yeah.
78.
46 rand, right?
Yeah.
Mm.
Let's go here now. How much was the price of MTN in 2024, 1 August?
1800 rand.
89.
89
89.
rand, right?
Yes.
So we want to see from 2024 until today, 2026, how much did the share price of this company increase by? So here it is. From when to when? 1 August,
1 August to 1 April.
yeah,
August.
to 1 April 2026. How many years? It's only less than 2 years.
2 years.
So we wanna see if you invested your money on MTN. In MTN, you put your money in MTN instead of putting it in a bank. How much will you be sitting on? And guys, this ad on the bottom left, it will keep popping up once you have downloaded this app. It's very important to know that you don't have to pay for anything, so you just cancel it. It will go away like this. You don't have to pay for anything to see this information, right?
Okay. All right.
So usually when I analyze companies, I like to turn my chart into a line chart. It gives me a clear. I feel like I'm an investor now. It makes me it just gets me into into that thing, you know. I feel like
Motion.
I'm about to. Yeah, yeah, yeah. So um
Okay.
the distance, or do you prefer the forex one or this one? We'll use whichever that you want us to use, whichever that you
I prefer the
want.
forex one. I don't know about the other guy.
Even line chart or candlestick is fine.
I comprehend both.
But
Yeah.
ungathi sinenamagembula lana bathi bafuna i-forex asibabuyisele.
But wait,
So yeah, so it's only gambling if you don't know if you can't manage a risk. If you can manage a risk, it's called investing or trading. So the distance from here to there, okay, let's take it here from here, exactly where it started. How many days is it? Number one, how many days is it? How do I see the number of days?
608.
608 days.
Days.
Is this a rocket science? Is this something that you can't understand? This is easy.
No.
You see,
Yeah.
so you have the percentage rate. MTN appreciated by 163%. It means if you put your money with MTN, your money in this 608 days would have increased by 163%. Does it make sense?
Okay.
So when I say you can make more than 40% per year, there's a video that I made where I said you can make more than 40% a year. Investing, and they said, oh, is it possible? Because they're used to 10%, 5%, pension funds, mutual funds, they give them like 10% max and all of that. And I understand that we just don't have exposure. If they knew, people wouldn't disagree, and I don't blame anyone. I don't judge them. I understand, because I also didn't know until I knew. And once I knew, there was no turning back. So 163 divided by 2. By the way, I haven't even explained to you what a share is, but you will know. So it's 163 MTN. Oh, I should have gave this a title. This is a bank. Asia Kodwa. This is MTN or shares, right? 163 divide by 2. We want to find for 2 years, right? How much has MTN made us? 163 divided by 2. 163 divided by 2. 81.5%. 81.5%. Do you guys understand what this 81.5% means? I don't think you do. Does it make sense?
It's a growth of the company, of the price.
Yes. Yes. It means every year your money was increasing by 81%. That's what it means for 2 years.
whoa, that's so whoa.
Yes. Yes.
Which is way less than when you would have invested in a bank.
When you saved it in the bank, yeah.
So this is the difference here, guys. This is a bank, right? This is a bank, and this is if I put my money with a bank, right? I
Yeah.
get how much? The 8.1%.
Percent.
But if I put my money with MTN, I got how much?
81.5.
81.5%. Does it make sense now?
It does.
Exactly.
It does.
So we contribute our money towards pension fund, towards mutual funds, towards retirement funds, towards well, what is this thing? Banks, investing our saving our money with a bank. They're taking all that money. They're taking all that money and reinvesting it. They come to buy these shares. They buy these shares. That's what mutual funds do. They buy shares. They buy companies. They take your money. They say, "Oh, well, now you can't invest. Give us your money. Come here. Come here. We will be happy to take it, because you can't manage it, right? We're gonna take it. We're gonna invest it, and then we're gonna give it to you only when you retire." I mean, how crazy is that? How how hey, how can how do I make sense of me working for 30 years of my life and just giving you money every month? I don't even question what the money is doing. My money is doing. You just said, "Oh, hey, give me your money every month. I'll keep it for you. It's fine. I'll give you 10%. By the time you retire, it will be this much." Okay, fine. You see that, okay, look, they promise you how much. They say by the time you retire in 2060. Now let's be practical, manje. Hmm. By the time you retire at 2060, they give you 2.5 million when you retire. That's fine. Fair enough. It's not bad. 2.5 million. You see, but the question is, this 2.5 million, remember, it will be losing value every year by at least on average 8.1% every year. So that 8.1% for 30 years that you're losing is not pap and flays. And this is only for 30 years, by the way. I mean, it's only for 8.1% average. It might increase, because how does it increase? The total debt that our government owe to their lenders is 5.8 trillion rand. It increased, guys. When I did this study, it was a long time ago. It was 5.8 trillion. What does it mean? It means that the total money that our government went to borrow, all this money that was created here, all the money that was created here. Do you still remember this money, right?
Yeah.
It amounts to 5.8 trillion rand.
Really.
That's the money that our government owe to their lenders. So let's say the government, let's say, you know what? Let's say if the government, let's take this loan. Let us owe the government ourselves, right? Let's pay off this to get. Please mute your microphone. Okay, so let's say we share it as a country to pay off this debt. We are how many people in this country? Is it for how many are we, by the way? 60 million. So 60 million people. We are 60 million. It means that each person, if we were to share this loan as a country, each person, because that money is all going to be paid by taxes, by the way. Government doesn't have money. Government's primary source of income is taxes, and taxes is us, the slaves, 9 to 5 workers, and all of that. So, this money is 96,000 rand. What does this mean? It means that if we were to share this loan as a country and say, let's just take this, it means each person will have to pay 96,000 rand. And by the way, this each person in this country, including the newborns, meaning the government expects 96,000 rand from every person living in South Africa, because of the money that they went to borrow and printed without our permission. So they will have to come for this money. this 96,000, they already know that each citizen in this country, they owe us 96,000. So they will have to come for it through different types of taxes. This is why they will come up with fancy words to take your money. They'll go like, let's give it a fancy name. Well, we're just gonna go call it VAT. They will know us very well. What is VAT? VAT is just a fee that we charge them for buying groceries and clothes and furniture and cars and everything that they buy. Just for buying, just for them spending their money, they need to pay us, the government, 15% of whatever that they spend. Insane. So they notice that this thing, this 96,000, it doesn't cover everything that we want. So let's introduce more taxes. What do we introduce now? Let's call this one company tax. Right? You go like, oh, it's a company tax. You feel it feels fancy, you feel special because they just give it a fancy name, It feels luxurious that you pay a company tax and you enjoy giving them your money. You don't even think about it. So they come up with another term. They realize that this money is not enough to cover the 96,000 they want. So they keep on introducing more and more taxes. We'll have estate duty, we will have inflation, we will have inflation is also tax. It's invisible tax. We will have capital gains tax, we will have estate duty, we will have pay as you earn, the highest of them all. Right? You have inflation. You have estate duty. Right? So it means all these taxes, they are all introduced just to make sure that they recover this 96,000. For what? So that they can pay off the loan. Loan. This is a loan. This is a loan here. So that they can pay off this 500 billion here. They still need to pay, but they're going to pay it as 550. 500 billion plus what? Plus 50. Because they have to pay it back with interest now. And then it goes like this now. And then they cancel each other. They're left with how much? 50. This is plus 50. So the Reserve Bank is gaining how much? Guys, I wrote SARS instead of SAP. I'm sorry for that. So this is SAP, it's not SARS. So the Reserve Bank made how much? They made 50. Out of what? Out of thin air. Remember that money, it was printed out of thin air. It was just someone sitting on the computer and they just typed it on the computer because they don't have money. So as the slaves, we have to work very hard so that they can collect the taxes and do what? And pay off the debt. And if you can't work hard, they lose you and they don't want to lose you. How do they lose you? If you lose your job, if you lose your 9 to 5, it means you're no longer paying pay as you earn. If you're no longer working 9 to 5, you're no longer paying pay as you earn. For them, they lose a source of income. It's a source of income that they're not willing to lose. And if you're not paying pay as you earn, it means you're not buying groceries, you're not buying clothes. As a result, you're not paying VAT. They're losing another source of income because you lost your job. They don't want that. And then if you don't pay VAT, it means the company is not making money and they don't get company tax. So if they don't have company tax, they will print more money, which will cause inflation. And if you don't have money, you keep losing it. They lose it. They lose the power to print more money because you can't repay it back. So they want you within this slavery system of working 9 to 5 so that they can exhaust the highest taxes as much as possible. So this is why you need to invest. Because when you invest, you don't work for money. When you work for money, you pay the highest taxes. Pay as you earn is the highest taxes of them all. It can go up to 45%. Company tax is for 27%. Value added tax is about 15%, right? There's capital gain, there's estate duty, there's so many different types of taxes, and they are all going to the same account, same person. It's just them saying, give me your money. But for you to give me your money, I'm just gonna call this one a right hand money, right hand tax. You give me your money through your right hand, and then I want more money. I want to pay school fees for my kids. I'm just gonna um offer my left hand and say, give me your money with your left hand. We're gonna call it left hand tax. Give me your money with your mouth. We're gonna call it mouth tax. And if you don't, I will arrest you. It's force. And now I designed it in such a manner that when you get a salary, before you even get that salary, I take that tax. But anyway, inflation is good for assets, guys. Inflation is good for assets. And what are assets? Assets is things in the likes of crypto. Crypto can be an asset, right? You have shares, you have property, you have gold. There's different types of assets, right? So the more they print money is the more the value of assets goes up because money loses value. Why? The price of property will always increase in value. It's an asset. The price of shares will always increase in value. It's an asset. But hey, sometimes they do decrease. Even a property. If they build properties, let's say maybe in Sandton, they build some nice estate, the prices skyrocket, and illegal foreigners come and put some squatter camps next to the estate. The value of that property will suffer, right? If those guys are not there, the value of property will increase if the location is good. The same as with shares. Shares are not always going to go up. Sometimes they're going to go down, and we have to face it now to understand that you are not always guaranteed. Okay, so you are not always guaranteed. The share price went from how much? 208. When? Here. When was this? 2022. To how much? 92.03. That's a loss there. That's a loss. So sometimes it can happen. So what happens? How do you lose money in shares? Now we get into investing 101. Now we get into shares. Before I get into shares, let me wrap up this. The Reserve Bank controls the world. It's as simple as that. And the Reserve Bank, the one that we are working for, is a private company that is owned by individuals. There's a list of shareholders of the Reserve Bank. You can always find it. They are private individuals. So we work for them. We are their slaves because we work very hard so that we can pay what? The taxes. Right. So the best way for you to survive the system is to buy assets so that when they start causing problems, because remember, for this money to be printed in the first place, the government have to identify a problem. Without a problem, money can never be printed. So if there's no problem, they will create a problem. They will create a problem if there's no problem. I hope it makes sense. If there's no war that requires money printing because they want to steal this money, these politicians, if there's no war and the banks want to make money and the Reserve Bank want to make money, but the slaves and businesses have to suffer, does it? If there's no war, they will start war. USA will start a war with Iran out of nowhere. Although they're just trying to save their empire, American empire is dying. We're witnessing it. We're living in the times of history. this is a big shift. America is losing the dollar, guys. It's over. China and BRICS are emerging now. And America is losing simply because of the petrodollar. So I would encourage that you study the petrodollar. You'll understand that war in Iran. You'll understand why America is just trying to distract us by getting into war, because they're losing the main goal. The main thing here is the petrodollar. But anyway, yeah. So if they don't have problems, they will start them. So now I want to get into investing and explain share and what is a share and all of that. So does anybody have a question for now before I get into that? Any question? Yes, Tlamani. I see your hand is up. You can unmute your mic and we can't hear you, Tlamani. I think there's something wrong with your line. Or can you guys hear her?
No, I can't hear.
Okay, thank you. Yeah, it's probably her line. So nobody have a question for now. We can move on. Yes. So okay, guys. The recording, right? You are going to access it without me having to share it with you.
Sorry, Mister. Sir,
Pardon? Yes.
I have a question. You said what is the reason for America to start a war?
Um, the America is losing the petrodollar, and they are the biggest detonation. They're the largest detonation on earth. On paper, on balance sheet, it seems like Japan is the highest, but yes, on balance sheet, America is not the highest. However, in reality, America is the highest because they have long-term debt that is not on the balance sheet. They have more than 100 trillion in debt that is not on their balance sheet. But on their balance sheet, they only present 30 something trillion. So that is going to crash the economy because everyone will now have to work towards paying that debt, that those trillions, right? And they don't have an income that is coming in. They don't have an injection. So they lost the petrodollar. That was their main income. It was making them a lot of money. Petrodollar simply means that okay, okay, hold on. Or map. Yeah, let's just do this. I approve this person first. Please mute your mic. It's a, thank you. So okay, so here's the thing, right? Let me do it this way. No, this is not so visible. Okay, good. This one works. This one shows very well now. Okay, guys, here's the thing, right? There's a thing called petrodollar. Petrodollar simply meant that, okay, after the war, back in the 70s, after the war, the UAE, this guy is here. Okay, I was actually looking for this one. Which color is more visible? Red. This guy is here. They have oil. They have a lot of oil. right? But they don't have technology, or they didn't have technology. So USA had the weapons. So these guys, they needed weapons, right? So so that they can protect themselves. So they had money, but they didn't have technology. So US gave them weapons. But in agreement, the US said, for us to give you weapons, all the oil that um is sold in the world, it must be sold in dollars. Meaning, if I am in South Africa, I want to buy oil from UAE, right? I have to do what? To go and get American dollars first and pay using American dollars, meaning I'll have to exchange the currency from rands to dollar so that I can use dollar to buy oil at UAE. So that's us converting our rands to the dollar, and every currency in the world doing the same thing was gaining dollar some interest. They were gaining something from that. For every transaction, they were gaining. Oil is working for everything. So now they lost, actually, they didn't lose. That contract expired, right? It expired it doesn't have 5 years, I think. Well, yeah, it expired not so long ago. I don't remember the exact date. And then these guys, they don't want to renew the contract, meaning we are no longer forced, the world is no longer forced to use dollar to buy oil. So China was processing transactions with their currency. They were processing oil transactions, they were buying oil with their currency without using the dollar, because that contract was no longer renewed. So dollar is losing left, right, and center. And then on the other hand, you have the BRICS that is emerging. And then at the same time, you have Iran. Iran doesn't have the central, the thing, what's this thing called? The central bank, the reserve bank thing that is controlled by those guys, the Rothschild and all of that. So it's two things at the same time. Number one, they want to digitalize, they want to introduce digital currency. Central bank digital currency is called CBDC. It means that the central bank controls every money. No, we'll no longer have cash. That's what they want. We'll no longer have cash. And if we no longer have cash, it's more like let me okay. So if Kujo, thank you, I see the message. So if we no longer have cash, we're no longer using cash to transact, everyone will be taxed, because now we will use digital money. We will be swiping, we will be using speed points everywhere. Meaning, even in the taxi, you'll be paying with digital money. You'll be swiping, you'll be using a speed point, you see, and all of those things. That way they can see our cash, everyone's money in the world. If you say something that they don't like, they shut your money, they deactivate your money. If you do something that they don't like, they can deactivate your money. If they want you to spend your money, they can tell you that your money can expire if you don't spend it. If you want to save your money, they'll say, no, your money will expire. If they want to put us in a lockdown, they will just deactivate your money and your money doesn't work. Like your money can freeze. And if your money doesn't work, what will you do? Because now you don't have cash. So that's what they want. That's the central bank digital currency. Who is the central bank? The Reserve Bank. They want to control all the cash because they want to collect taxes from us, even from the street vendors. So Iran, because they don't have this system of the Reserve Bank, is becoming a problem now. How is that becoming a problem? Because it's becoming they're saying no, we can't take the Rothschild system. This is why they even killed Khamenei. Everyone who disagrees with this system, he gets killed. Simple example, Gaddafi. Why was he killed? He wanted to unite Africa, and that would have led to what? The Rothschilds not having control in the financial system. They kill him. Bin Laden. Just check the trend. Before this war in Iran, before war between Israel and Iran, that um 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 what's uh this word, guys, English. uh, uh Before Israel and USA, they actually made a relationship, built a relationship, for lack of a better word, built a relationship to go against or ganged up against Iran. Before that, there was a war in Afghanistan. There was a war again in Lebanon. There was a war in Yemen. So, and also in Ukraine. So, but these other countries, they do have the Reserve Bank. So the guys that don't have Reserve Bank, they're always going into war. Why? Because they want to kill their leader. So they believe that if you kill the leader, you can actually control the followers. It's easy to control the followers. Take example with Alexander the Great, when he conquered the Persians, because this were the Persians before they were the thing. The Persians were here, right? Wait, is it starting from here? Yeah, but the Persians were somewhere here, where this guy's here. So when Alexander conquered those guys, he was killing their leaders. He was only killing leaders. He was going through the sea, killing their leaders, so on and so on. Because to conquer the world or to conquer anything, you need to kill the leader first. So the USA thought that killing this guy wa Iran, Khamenei, will actually give them the power to control the Strait of Hormuz. That way they can control the oil that is living here, meaning everyone will do what? Because 20% of the world oil, it came from here. This is why this currency is the Kuwait. Kuwait is the strongest currency in the world. It's about it's about 51 rand to ZAR. So this is because of the oil. This is why these guys in the Saudis are so rich. Why? It's because of oil. You see. So oil is what makes them so powerful. So USA want to take over this just so that they can at least secure the what? The petrodollar status, so that they can say all the oil that passes through here, it must pass through dollar. But the question one would ask, why can't they just fly the oil? Why can't they, why don't they just fly and distribute oil to us in Africa? Or even go to the US, or go to China, or go to India? Well, oil can't really fly. It's very expensive, and that is going to cause everything to be expensive in the world. So the cheapest way to deliver oil is through water. So this choke point here, it was created by God. And I believe it was created for these guys. It's for them. It's the only place in the world that is structured like this on earth. It gives them a very, very unique power. So USA want to control it. And this is why they wanted, and now, because they want to control this oil, it gives you an idea of why USA is now bad-mouthing South Africa. Here's the thing. If you want to kill a leader, you have to start by bad-mouthing them first. You start by messing up with their reputation and then kill them and then tell their people that you are saving them from their leader. That's what they did to Iran, only to replace that with their son. So this is South Africa Cape Point, or African map. Africa map. Now it will make sense as to why we should not even agree. We should never even think of saying, hey, we agree with Ubaba Trump. Those are South Africans on social media. They'll say, hey, we agree with Ubaba Trump. so that he can give us freedom to kill our leader and put a puppet there. So they first started by securing oil in Venezuela. They captured Maduro so that they can secure oil, so that when the whole world goes into panic, they have oil in USA. That was a strategy. Now they want to go for who? For who's this guy? For Canada and Greenland. Why? Because they have oil and they see that the world is going to go into panic. So they want to secure as much oil as possible. And then who's next? Cuba. So they're going for this oil. But for the oil to go from here, okay, let me do this. Guys, are we even still on the topic of shares? For oil to leave from here, the Strait of Hormuz, silly. It has to pass here. They take a rest here. It's called Cape Point before they can go to the US and other countries there. Does it make sense? So this is why he wants to control this point, which is the Strait of Hormuz, plus here, Cape Point. This is why Elon Musk is always bad mouthing us. They want to take over this place it's for oil. That's how the map is designed. I hope it makes sense. Guys, does anyone have a question? Does it make sense up to so far?
I have a question.
Yes. Yeah. What's the question?
Oh, my question was, if Iran blocks the Strait of Hormuz, so that means that petrol will become expensive as it is now. So which makes people to buy electric vehicles such as Tesla cars. So will the Tesla stock rise?
So obviously, yes, if people want to switch for cheaper alternatives, um, Tesla is the number one on their choice, right? But look at the share price of Tesla now. What is going on with it ever since the war started? It has been going like this. Okay, yeah, this is what I mean when I say a company reflects the performance. This thing reflects a performance of a company. So let me show you. Tesla went up, right? So this was Tesla during the inauguration now. Was it during the inauguration? No. But it was during that Trump's era. When was Trump elected? When was the inauguration? Was it last year, beginning of the year? Or this year, beginning of the year?
Last year.
This year. Yeah,
Last
so
year.
Elon, last year, was it here? I think it was here. So he joined politics. He went too much into politics. He started supporting Trump. The share price of Tesla did what? It decreased. Okay, let me do this actually. This chart, I think this is why I'm not really a big fan of this chart because so you notice that it went up, right? And it went down. After the inauguration, he started to get deals and all of that, and the value of it went up. So now we are in a war. We are currently here, and it seems like it has a small thing. And usually, bona they wait for pullback and then they buy. So that could be the possibility that okay, people are expected to buy Tesla stocks, so let's buy it. So I hope it makes sense. So we just buy companies that will benefit the most from war, which is oil companies and weapon companies. Those ones are going to benefit the most. Simple as that. And then after is going to be construction companies that will be constructing that area that is destroyed because they are going to take it. So Why do we find information about a company? This is Tesla. Where do we find information? Let's go back to MTN. Let's stick to MTN. So when you search for a company, right, you just click here. When you're on Trading View, you just click here. Down there where it's written CSLA, Tesla, you click, you search MTN. Because MTN is a South African company, you scroll down until you see MTN that you are familiar with, the one that have a South African flag. You keep scrolling, and here it is. Click on that. Take us back to that share. So let's say now you want to see how much MTN is making. You click down here to see the statements. There's E, there's D. E means earnings, D means dividends. I'm still coming to that, both of them, to explain them, right? So earnings, you just click there, it will take you to this page. You see the overview. What is the overview? The market capitalization is, I want that thing. I want this to show in here so that I can use it to pinpoint. Doesn't want to show. Let me see. Okay. Yeah, good. So you see the market capitalization is the REF56. The company was founded in 1994. Number of employees is not disclosed here. The dividend yield is 2.646%. MTN website. What does the company do? You can read here about MTN company engages in this. How do they make their money? You go to earnings. Earnings, it will tell you how they make their money, right? And all of that. You just read this information. And then revenue, it will tell you where they generated their money. You see, they generated their money from where? Their revenues from network services, digital and fintech, interconnect and roaming, mobile devices, interest and other. So their amounts is this ones. So from network and services, the airtime maybe, I don't know. In 2025, they made 165 billion. And then from digital and fintech, they made 34 billion. So you just see, their major source of income is from digitals, from network services. That's how you should analyze a company to see how the company performs, right? You can also see from this chart, it says the same thing. You see, it even tells you. So is the company paying dividends or not? What is dividends? Dividends is when a company pays you periodic cash flows. What is a periodic cash flow? Periodic cash flow, it means you invest in a company and they give you 10% every quarter or every whatever. So if a company is paying dividends, they will tell you, here's the dividend. It shows history of dividends. How much has the company paid in dividends? 5 rand dividend amount. What is 5 rand? That's 5 rand bin. The 5 rand means this company paid dividends, 5 rand of dividend per share. What does it mean still? It means that out of the 200 rand per share, they give you 5 rand. Meaning if you own 5 shares for 200 rand each, they will give you 5 rand each. I hope it makes sense. Another thing. So another thing that you must know if you invest for dividends. First of all, if you want to buy shares, this is you. This is broker. This is JSE or stock exchange. Broker is in between. So when you buy shares of Boxer, you go to the broker. A broker is what? Is the equity.
Oh, just a middleman.
Yeah.
Or just the middleman in simple terms.
Yes, it's just the middleman. So it's easy equities. Sometimes you can have a broker as broke stock. Or let me show you brokers. So you have broke stock, right? You have shifts, right? You have easy equities, right? You have PSG, right? You have Cetrix now. There's so many different brokers. You just choose one, but it's the middleman. That's where you buy shares, right? So the broker will be the one to negotiate on your behalf at the stock exchange. So Boxer is selling shares. Boxer in 2024. Now we're in 2026. In 2024, they were having financial problems. So they wanted not Boxer, Pick and Pay. Pick and Pay have financial problems. Please mute your mic. So Pick and Pay have financial problems and they wanted to fix them. They wanted money to pay suppliers. They wanted money to do this and that. So they had to use their subsidiary company, which is Boxer, to go public to buy shares, to sell shares for people to buy, to raise capital. So Boxer, if you want shares, you can't go to Boxer to buy shares. Boxer take their share, they register their shares where at the Johannesburg Stock Exchange. And then you go to the broker to buy shares, and the broker will go to the stock exchange to buy those shares on your behalf. Does it make sense?
Yeah, it does.
Yes. So now that you know that a broker, what is the function of a broker? Now we get into shares. You have dividends, you have capital gain. Number one, what is dividends? Dividends, they give you periodic cash flow or cash flow. Let me just write cash flow. Here you get capital appreciation. You get appreciation. How do they work? Let's say you invest 1,000 rand. You invest 1,000 rand in a company. You buy Boxer shares. They say they will pay you dividends. They'll pay you a dividends of 5%. It means your money now will be 1,000 plus 5%, which will be how much? 50 rand. So that's the dividends, 1,050. So this is your amount if you are getting dividends. However, if you are getting capital gain, they're saying, no, we're not going to pay you dividends. There are companies that don't pay dividends. Agree or going to MC and it shows that you pay dividends. Companies like Amazon, they don't pay you dividends. Let me show you. Oh, Konji Amazon is not a South African company. Hi. Amazon, they don't pay you dividends. How do they work? Boom. Do you see how it shows if the company doesn't pay dividends? So they'll say no dividends, and the company has never paid dividends, and it has no intentions of paying dividends. So these are the statements. The statements, you have income statement, you have balance sheet, you have cash flow statement. This is where you read information about the company. This masterclass is too short for me to cover all these things, to explain what a cash flow is, what is cash from operating activities, how do I break it down. We teach them on one-on-ones. This one when we have enough time. It's a whole subject in itself. So you have cash flow, this is the statement that captures all the money that flew, or that was flowing through cash, all the money that was flowing in the bank statement. So if we say a company, I'm thinking of an example. Okay, if we say a company or a property increased by a value of this much, and that value, we didn't have it in cash, that is just a capital appreciation. It's not it's not cash. So cash flow accounts for all the transactions that happened in cash. Balance sheet records all the assets and the liabilities of a company to see the equity, meaning the value of a company, their assets and their liabilities, to see how much the company have in assets and how much they owe. Are we paused, or is it from my side only? Can everyone hear me?
Yeah, I can hear you.
Yeah, we can hear you.
Okay. So yeah. This is where we check the worth of a company, right? We read the numbers, and then income statements, it records the incomes and expenses of a company, the daily operations, the operating expenses. This is a whole subject in itself, right? So now we are on capital gain. We came here because of dividends and capital gain. So this company doesn't pay dividends, it pays capital gain, or you make money from capital gain. It simply means that you only make money when the value of your shares increase. How? What do I mean by that? What I simply mean is that you buy your shares here, 1 December 2022, and then you only make money if you sell. So the value of your shares will keep going up and down, up and down, up and down, up and down and up, right? So far, you are sitting on how much? Do you see, guys? Do you see that? Okay, for how many days? 1,200 and these days is how many years? 4 years. 3 years. 3 years or 4 years. How much have they made? 197%. But it's not always the case. So, capital gain, you buy your shares here and the company increases by 197, it means your money is also increasing by 197, and you can only access that money once you sell your shares, because now you sell, right? Remember, first you bought them and then now you sell them. That way you'll access the money. So let's say the company increased by 197%. So when you put 1,000 and the company increased by 197%, it means it's 1K plus 197%, which is equal to, is it 3.97? Hmm. 1 plus 197, 2.97, not 3. So it's 2,970. So it means you can only access your money once you were resilient enough to wait for all these years. That's capital gain. So they don't pay you periodic cash flow. I hope that makes sense, right? So now we come back to our main slides now. So this workshop helps you follow the class, understand the basic shares of investing concepts, create a beginner-friendly research plan before risking your money. Where do you do your research? TradingView. It has got all the information. Or alternatively, you can use what? Salmax platform. This can help you with research. For example, you can go to market sentiments. You can see the chart. This is a poll here. You can search any company. You can turn it into line charts. You can search any company you like. And since I had, you see, it's the same thing. So this is the share price of Apple. How much is it? Where's that thing?
70.
Yes, here, 270. It shows the same thing, right? You have a stock heat map. This is very, 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 very important. You have crypto heat map, you have stock heat map. So heat map, this the red and green. It shows you performance of these companies and industries in a day. So it shows today NVIDIA it minused by um 1.59%. Apple increased by 1.16%. It means if you bought Apple shares, your money would have increased by 1.16%. If you bought NVIDIA shares, your money would have decreased by 1.59% today. So it's a heat map. This is why when it's all red, usually people will blame Trump because red means loss. And crypto today, how was the performance of crypto today? It was a loss. Do you see it's almost red, like it's reddish, right? The
Oh,
screen is reddish. And then you have an economic calendar, blah, blah. This is for traders. And you have the statistics here. Unemployment rate is 32%, mining production minus 30, so on and so on. And then you have market news. Have your economic calendar here, short-term investors. And then, yeah, so another thing is that you are able to manage your goals. Guys, if you don't manage your money, if you don't track your money, if you don't plan for your money before it arrives, before you receive that income, you don't budget for it will disappear. Like it will just disappear into thin air. You won't know where it went. So this platform, it can help you, and it's free, by the way, 100% free. So it can help you with recording your incomes and your expenses. Let's say my expense is food or transport. Food, how much is my monthly expense? 500. How much? No, sorry. You write the description, gross, right? Amount 2.5, right? I know that I budgeted for it. Is it recurring every month? Yes, recurring. Save the entry. It's going to put it on my ledger here. Number one, do you see that number one here is 2.5 for grocer? It shows that, okay, oh, now I have my expenses. My expenses is this, my incomes is dividends is this. Now you are able to manage your money. It's easy for you to manage your money, right? If you have goals, you can use it, right? Your goal is to invest or is to pay off the debt or is to save, right? Oh, saving for what? Vibe. My target is how much? 300,000. 3,000. How much am I starting with? 1,000. My deadline, when is my deadline? 30. Or let me just say 26. And then initialize the mission. It will bring the goal here. It's called Vibe for how much? 1,000 rand. And if I put more 1,000, if I increase money into that goal, that account, whatever, I just add or I custom add. You see, so on and so on. Portfolio tracker. Ish, guys, I fell for this trap. I started investing in 2017 and I've been opening brokers every now and then. Most of them I forgot their passwords. So I lost some of those shares because of the passwords that I forgot. Some of them I still get the emails. I'm unable to log in. Some of them I can. So some of them I don't even know which shares do I own because I've been buying. It's just the thing of buying, not knowing, not even knowing what I'm doing because I couldn't analyze companies. So here you are able to record your stock. You have a stock. What is the stock? It's Apple, right? Apple shares. Quantity. I only own 4 shares. What price did I buy it? I bought it at 2.3. What is the current price? The current price is 279. Add an asset. It will tell you the percentage growth of your shares today. You see, April 116, so on and so on. But anyway, yeah. So market news, you have the news. You read about these things, not the information that we get from TikTok, guys. Especially from the US about war. This is the information to read. You have stocks. It tells you about the stocks. Apple, oh, Tim Cook is resigning, blah, blah, blah. Crypto is doing this and that. Forex for traders, so on and so on. And then interesting part, so the calculators. If you want to invest, this is your investment calculator. So this one is very important. Now let me explain to you. Your initial amount, let's say you want to invest, you initially you invest 1,000. Every month you save, you invest 500, and you want it for a duration of 20 years. You want to invest for a duration of 20 years. And the annual return is like 15% per annum. Compound frequency is annual. After 20 years, how much would you be sitting on? Here it is. It shows you your calculation. There's also a retirement calculator here. Use them to see tax calculator. You made money, you don't know how much in tax are you expected to pay. Tax-free savings account. You have tax-free savings account. You don't know how to use it. You don't know how to calculate it. You have two-pot calculator. You have withdrawn from two-pot, but you don't know how much you are left with. You just enter the details here. You just enter the details. It will help you. So yeah, anyway, let's go back. So before we begin, investing in shares means buying small ownership in a company. The goal is to learn how the business works, understand risk, and make disciplined decisions over time. Not to gamble or chase quick profits. It takes time to make money in shares. We don't chase quick profits. We don't gamble. So follow each section, write down, blah, blah, blah. You know these things. Your reasons for attending this masterclass, write it down. I want to learn about this and that. Um, you will learn what a share is. You know, a share is a piece of ownership in a company. A company want to raise money. They say we want to raise money, but we don't have in. Let's say I'm Salmax, I'm Mr. Salmax. I want to expand Salmax. I want more offices. I want more employees, but I don't have money to expand myself. So I can go to people and ask them for money to buy to give me money. That way, I'm selling my shares and they are buying. This is why we say we buy shares. So they are buying my shares. They're giving me their money to own to have a piece of ownership in this company, right? So build a simple watch list, checking a company. Yes. Okay. So I believe we all understand what a share is. A piece of ownership in a company. The difference between investing and trading, I explained it earlier on. Investing is long term, trading is short term. Why risk management matters, I showed you that shares can go up, sometimes they can go down and you can lose. So what is dividends and what is capital growth? I explained them. Dividends is periodic cash flow. Capital growth, you buy shares today and they increase in value. The rate at which they increased in value is the same rate which your money increases in value as well. So how to research before buying? You go to Trading View or you go to Salmax app, you'll find those things. And then yeah, how to avoid hype and scams. So a way for you to avoid scams is by following this. This. This is the only way you buy shares. You buy shares from a broker. You never give me your money to buy shares on your behalf. You never give anyone your money to buy shares on your behalf. You go to a broker, you download it on your phone. If you have problem with registering an account, I'm here. You can text me and ask me. I will help you. and then you buy shares from there. You never give anyone your money. The only time you deposit money or money leaves your pocket is when it goes into a broker's account, right? So that's how you avoid scams. You don't give anyone your money. So questions I want answers answered today. If you have them, ask them while I'm still here. What is a share? A share is a simple piece of ownership in a company. When you buy a share, you become a shareholder. If a company grows and performs well, your share becomes more valuable. But if the company struggles, the share price can fall and you can lose money, right? Two possible rewards: capital growth. Capital growth is when the share price increase over time. And number two is dividends. Dividends is some companies share part of their profits with shareholders. Now I'm summarizing, right? Two major risks: the share price can go down and the company can perform bad, or the company can stop paying dividends, or to lose investors. Oh, how do you see the percentage rate which companies pay you dividends? I didn't show you. Oh, I did show you, but I didn't clarify on it. Let's go back. So here, you notice that you have just under the graph, there is dividend per share and there's dividend yield. I hope you can see them. So dividend yield, they are shaded in blue. Dividend yield, if you check 2019, it was 6.67%, meaning for 2019, they gave you 6.6% per year to own this share. Oh, when did they pay? Down here, there's a history of payment frequency, dividend payout, right? History. Payment date, it was 2 September 2019, 6 April 2020, 4 April 2022, 11 April 2023, 22 April 2024, 14 April 2025, 13 April 2026. These are the date at which they paid dividends. There's more that goes into it. So those are the things that we usually come on the masterclass, more of them, as to how to what do these different dates mean to you: ex dividend date, record date, ex dividend date, and record date and payment date. And what else? There's 4 dates: ex dividend. Oh yeah, um declaration date. That's the date they declare. So how do you know the percentage rate of dividend which the company is paying? So we check dividend yield, guys. Dividend yield is the one that we always check, whether on top of the screen or at the bottom of the screen. Where you see dividend yield, just know that that's the money that they're going to pay you. So in this case, dividend yield is 1.69%, meaning if you invest your money with MTN, if they pay you dividends, they're only going to pay you 1.69%. Is it worth it to invest your money and only get 1.69%? You ask yourself that, right? So, yeah, in my own words, what is a share? Guys, this will help you with practicing, guys. I really encourage everyone to do this. So investing versus trading, the time horizon. So usually investing takes months to years because it focuses on business quality and long-term growth. Whereas trading usually takes short term because the purpose, it focuses on price movement, the chart, and timing. Chart is that one that I showed you. Timing is when they wait for the third touch, right? So the main question when it comes to investing, when we invest, the main question that we ask ourselves in most cases, um, is this a good company or a asset to own, right? So when you invest, ask yourself, am I buying Boxer because I heard Fortune talk about Boxer on TikTok? And now I'm going to put my money into a video because of a video. I'm going to put my money into Boxer because of a video that I saw on TikTok. You see, those are the questions that you should ask yourself. Is it a good asset? Will this business still be there in the next 10 years, right? Think long term when it comes to investing. And then with trading, your question should be, can I manage this trade setup and risk? Can I manage the risk? Am I using the right lot size? You see, beginner warning. Investing still carries a risk. You see, but patience and research are required. Simple as that. For Forex, higher risk for beginners, easy to overtrade and lose money quickly. No Forex trader that I know has never lost money in trading. And even in investing, you'll still lose money, but you will stumble and learn. Start if you haven't started. If you have started, please improve. Know what you're doing. Understand how to value a company. The only thing that matters in investing is how to value a company. If you can't value a company, you're cooked. So which one is better right now? Right? So my principle is that beginners should first learn financial discipline, budgeting, saving, emergency fund, and basic investing knowledge before trying to risk high trading strategies. Before trying high risk trading strategies, learn those things. Learn how to budget. You have the tools. I gave you this tool free of charge. Free. You just go there and access it. Use it as much as you like. And by the way, if you have a business and you're selling something, just go to business marketplace here and list your items that you're selling. So you can just say list a product, you see. List a product. What is your product? You write your product's name, the description, the price, the category. What is your products that you're selling? And then you upload an image of it, and then you write your contract numbers here. Here you write your thing, your website if you have it. And then here is the stock if you are still in stock or services available, so on and so on. And then you publish the listing. That way, when people want your business, want your services, they can come here, they can see it. And then what else is here, by the way, on the academy? Okay, fine. So yeah, you can also, if you guys want to book me for something, maybe you want me to teach you, feel free to reach out to me here. You just tell you want me for speaking at a school, event, church, whatever, or do you want me to train you one-on-one or workshops, or do you want a one-on-one consultation, so on and so on. And you just follow the steps, right? And then what else is here, by the way? Yeah, I would recommend that you use this personal wizards. It will help you. You just write your salary here. This information, no one is going to see it. It's only you. Your monthly salary is 20,000. You earn monthly. Your expenses are this much, and then you go to the next step. It will help you guys. It will help you with your financial goals. You write, oh, my goal is to save 10,000, and then next step in the next 3 months, right? And then it will arrange your finances for you. That way, it says it will give you AI personal insights. If you can see here in blue, it says based on your high fixed cost, we've optimized your categories to reach your 10,000 goal, right? And it gives you all the suggestions and everything. So you can even have reminders to say, okay, when my salary is coming, please remind me, so that I'm not reckless, so on and so on, you see. But you can see it, guys, and then it will do them here. It will show you. If you can see your money, you can manage it easy, guys. Please use these tools, guys, even if it's not this one's for Salmax, but find budgeting tools. If you can't manage your money will manage you. Plan for it before it plans for you. So what is budget, right? Know how much money comes in and comes out. And goes out every month. This one is a must. Know how much you make and how much money lives in. Have emergency fund. Protect yourself before taking investment risk. Debt check. High interest debt can destroy progress faster than investing can build. The goal. Know why you are investing. Is it for education? Is it for wealth building? Is it for retirement? Is it for family security? People have different reasons. Have the time horizon. Your time horizon, the longer you take, the longer your time frame, the easier it is to handle the market ups and downs, right? Important note is that if investing in money, um, if investing money will make you unable to pay basic needs, pause. Learning first is also a progress. So if you feel that you have money, I mean, your investing is actually making you not be able to pay your bills, stop and rather invest in your education. So fill this in. What is my monthly income, or amount I can invest safely? My investing goal, my time horizon. You see, plan for your money, guys. Plan for your money. Your money without a plan, it will it will just fly like a feather. Imagine you just go. Imagine a ship without a navigator. It just roam around the ocean and doesn't have a direction. You see, it becomes a problem. That's what happens when your money doesn't have, you don't have a plan for your money. You won't see what happened. You'll be surprised by everything. So before you invest in your company, research. This is how I do a research. How does the company do? What does the company do? Is it a company that I can understand? Do I understand how they make money? Is the revenue profit? How do you understand if they make money? I showed you, you see the statements. Is the revenue or profit growing or declining? Is it growing or declining? Go and check those things, right? You check them more at trading view. Does the company have too much debt? You check that on a balance sheet. Trading view still. Who are its competitors, right? What risks can affect the business? Is it load shedding? Is it COVID? Is it fuel prices? Do I want to invest in logistics and fuel prices affect my investments, right? Is the share price expensive or reasonable? Or is the share price expensive or reasonable compared to businesses? You see, you compared with their competitors. Will I still be comfortable owning this share if the price dropped? You see, because a company can be popular and still be bad investment at the wrong price. So always separate hype from research. Don't say because everyone is buying Nvidia you also want to jump in. It becomes a serious problem now. So after you do your research, when you do your research, write down the company name, write down the ticker name. Company name is Apple. Ticker code or ticker or code is the symbol for Apple. This is the ticker, guys. When we say ticker, ticker for gold is XAUUSD. Ticker for Nasdaq is NAS 100. Ticker for MTN is MTN. It's just MTN. That's the ticker. That's what we mean when we say the ticker. You see, so what industry is it? Is it telecommunications? Is it real estate? What is it? Why am I interested in this thing? You ask yourself this question. How does it make money? Do I understand how they make money? What is their main strength? And what is the main risk? Do they pay dividends or is growth focused? And what must I research next? You see, so make use of this. So these are beginner mistakes that you should avoid. Buying share because buying because of hype, investing. Hold on, buying because of hype, investing money needed soon, coping strangers blindly, ignoring fees and taxes, putting everything into one share. So this one, the point I was telling, even I didn't put the proper signs, commas and all of that. So what it means here is that you must be careful of hype investing. Oh, there's triple M. Oh, there's this, those hype. Better research before buying. You see, and you must diversify your portfolio. You must learn to manage risk. So, which mistake am I most likely to make, and how can I prevent it? So, based on these questions that you asked yourself, which mistake are you likely to make, and how can you avoid it? If you cannot explain why you bought the share in simple language, you probably need more research. You are buying a company here, right? So, yeah, share private sector, you do, this is for you when you're alone, when you're doing your thing. So this my beginner investing rules. I will not invest money needed for essentials. I'm not going to take my rental money and invest it. I will research before buying shares. I will avoid guaranteed profits or promises. I will not put all my money into one share. I will not buy one company. I will review my investments calmly, not emotionally. I will keep learning before increasing the risk. And then you write down your personal thing there. The goal is not to look rich quickly. The goal is to build financial understanding, discipline, and long-term decision making. So, what does owning a share mean? Now, these are the questions that I have for you guys. I need you to tell me, but you are going to write them on your own, right? What does a share mean? Name two ways which investors can benefit from shares. Why investing money for rent or food is dangerous. What is the difference between investing and trading? Name three things to check before buying a share. Why should beginners avoid a hype? Simple. Now you understand, right? This is a 30-day plan, action plan. Take action. Week number one, you review this workbook, write down the questions, your top questions. Week number two, build a watch list of 5 companies or ETFs to study. This simply means that you analyze 5 companies, research one of the company properly using the worksheet, decide your beginner rules and whether you are ready to start small. Investing is not a shortcut, it's a skill. Start with discipline, learn the language of money. Now you understand the language of money. That's the Reserve Bank. Understand risk and make decisions you can explain clearly. See the system and break the cycle. Yeah, thank you guys. So before I didn't explain ETFs, that's something that I remembered now. What is an ETF? ETF is a basket of shares. So let's say they put, this is my basket, like a basket. When I say basket, I mean like a real basket. Monkey, call it monkey rena mapedi asitlale. Hey guys, I'm an accountant by profession, so drawing is not my thing. I'm sorry if this doesn't look like a basket. So, but they create a basket and they call it an ETF. What does it mean? ETF, electronic traded funds. What do they mean? They combine the stocks here. So let's say maybe this is they call this S&P 500. What does it mean? It means that they put 500 companies in here. They put Nike, they put MTN. No, MTN is not in here. I'm just giving an example. They put Adidas, they put Apple. All these companies are in here. Each dot represents a company. Each dot represents a company, and they put it in here. 500 top companies, top performing companies, and they give it a name and they call it S&P 500, or they call it Nasdaq 100, or they call it Dow Jones 30, or they call it Citrix 40. That's 40 companies, whatever that they want to call it. so that instead of you buying shares one by one, instead of you going to buy Nike shares, MTN shares, Apple shares, you can just buy an ETF that have all these shares. So they grow at the same pace and they decrease at the same pace. So yeah, that's it for today, guys. Thank you very much for attending this. I don't take your time for granted. Yeah, I really, really, really do appreciate. When are we having another masterclass? I'm eager to learn more. Well, I'm not sure when are we going to have another masterclass, but we do have one-on-one sessions where I train you one-on-one. So if you would like me to train you one-on-one, or I just train you, just the two of us, I can train you. We have that. And then how to know you, please let me know. I will send you the details. How do you know if a stock is undervalued or overpriced? So I read the financial statements, uh, Mukwanazi. So I read the financial statements. Okay. I read the financial statements and check their performance based on the financial statements, not based on the charts or based on hype. I check the numbers. So there's some ratios that I look for, that I prepared them. There's a whole document for them that I look for. And I know that if a company is giving me this ratio, I don't get it. So those are the things that I look for, right? So what about tax-free? So Tlamani, tax-free is an account that the government give you. It's actually the government saying to you that you can invest up to 500 million. You sorry, why am I saying million? You can invest up to 500,000 rand, and out of all the 500,000 rand that you invested, all the gains, even if you make 100 million, you are not going to pay any tax from the gains. And then in a year is the total amount that they allow you to contribute is 46,000. It was 36,000. They're saying to you that you can contribute, you can invest up to 46,000 every year without being taxed on the gains. So it used to be 36,000. Now they increased it. It works for people who invest more than those who save. And I once made a video saying that tax-free savings account increase is a scam, and your social media will crucify you. And I looked at it from this perspective, to say, oh, the government want to raise funds, they want to raise more money, so they cut the duration term of the tax-free savings account. Previously, it was gonna take 14 years before they can start collecting taxes, not from the gains, but you just lose that benefit. It doesn't mean that they will collect the taxes, but you just lose that benefit. So they wanted to increase their cash flow as soon as possible. So they cut it to 10 years, meaning they cut it 4 years out of it. I looked at it from this perspective, and when I presented it on social media, hey, they will call you all the names, but they see the same thing. They don't understand what I see, whatever. But yeah, that's a tax-free in a nutshell. You don't, it means you invest all the money and never pay tax on all the thing, the gains. Okay. So Gumani, no problem. So here's the thing. This link, guys, I'm not sending you the recording or the link. Here's how it works. You go to Teams, your Teams, right? And then you go to chat. You see this community here, this exhibit, you go to chat, right? Under chat, you are going to find Salmax Masterclass, right? On your side, it's not going to show you all these meetings. It's going to show you only this one, right? Salmax Masterclass, and then you'll find the recording in here. Let's take example with this one of Dolly. Let's see. Here's the recording, right? You just come here and say download or delete. You click on download. You see, Nganyiso. This is the meeting that I was having with Nganyiso. The session that I was having one-on-one, I was having it with Nganyiso. So this is the recording. He's able to come back here and download the recording. So you too also, you can come back to the masterclass and download the recording. I hope it makes sense, guys. So I don't need to send it to you. You can watch it there or you can download it. So how's the 2030 agenda going to influence the way people invest and even crypto holders? Because I heard that they must sell their holdings. I'm not really sure. The only thing that I'm paying attention to about the 2030 agenda is the CBDC, which is which Iran is actually against that. This is why they're somehow in a war. So that's why they killed the leader there. So for crypto, I'm not really sure, man. As much as crypto is an asset and it's booming, I don't trust it fully because I mean, who owns crypto? Who invented crypto? We know who invented Microsoft. We know who invented Facebook, but crypto we don't. And that's where money is going. That market is huge. If it crashes, hey, that's. But yeah, um, more questions, guys. I think we ended the session. Let me stop the recording. So do you see that it says the recording, all members of the meeting chat can access it for 30 days. I hope it makes sense. Meaning if you don't download it within 30 days, it disappears. You can't access it anymore. So yes,